So you want to learn more about Cadence Capital's MLP and midstream energy strategy? Well, let's break it down piece by piece. Our strategy invests primarily in MLPs, or Master Limited Partnerships. This is a unique legal structure that's given a tax preferential benefit as long as 90% of the entity's gross income comes from qualifying sources, usually having to do with natural resources. MLPs allow income to pass through to the owners, avoiding the double taxation of other structures. However, since they're publicly traded, they offer the liquidity of stocks. They are businesses that historically offer higher distribution yields and steady cash flows on a long-term basis. Cadence is focused specifically on midstream energy MLPs. See, the energy sector is divided into three segments. Upstream companies are involved in the exploration and extraction of resources, think an oil derrick. Downstream companies are involved in the processing of raw materials, like an oil refinery. Midstream companies are responsible for the transportation and storage of resources, for example, the pipeline that connects one to the other. Our strategy consists principally of these midstream assets because they generate income based on the volume of material flowing through and not the price of the underlying commodity. Think of them like a toll booth. It doesn't matter how much the cars cost as long as they're traveling down the highway. Because of this, midstream assets tend to be more stable and are less correlated to other asset classes, providing portfolio diversification. They also often have long-term contracts that adjust to inflation, which can make them a hedge against rising prices. Most importantly, however, Cadence brings a unique factor-based strategy to investment in MLPs. Our approach strips away human bias and analyzes the numbers behind these companies, allowing us to deliver the benefits of active management at a lower cost. Here's how we do it. By taking an analytical quantitative approach, we filter all relevant MLPs through a suitability analysis based on current income, liquidity, and financial strength. The remaining assets undergo portfolio construction where individual securities weights are adjusted, and finally, a risk management process that limits concentration risk and liquidity risk through portfolio diversification. The result is a final portfolio that we believe has the potential to unearth a high level of current income, long-term capital growth, and tax advantages. That's it. Now you have a high-level understanding of Cadence's MLP and midstream energy strategy. To learn more about this strategy, one of our other factor-based strategies, or how Cadence is innovating and leading systematic rules-based investing, visit us at cadencecapital.com.